Hey traders, welcome to Charts and Coffee. We're taking a look at the, here we go, pre-market view of the indices to kick things off. As always, if you have any questions, feel free to type them in early so I can get to them and give you a good answer. Let me know what you're looking at, what time frame you're looking at. Maybe you're already in, long or short, etc. So the more detail, the better. And let's get to it. So first off, we continue to see some weakness in the indices. And, this is where I do like to pull up. Give me 1 second here. I'm going to pull up we haven't needed this in a little while, but I'm going to pull up what we endearingly call the sanity check. So these are labels that'll pop up at the top of this chart. And what these labels will show are what different percentage pullbacks are. Because remember, in an environment where 90% of market participants are going to buy with higher highs, you're going to buy calls on bullish momentum, any kind of pullback is, well, frankly, trauma and disastrous and everything else. And ultimately what happens is when you buy at or near highs, any kind of pullback, especially below that session's low, becomes really a problem. It's likely just a journey untenable to the target, which is why we like to focus on pullback buys, not momentum or new high buys. That said, this is not in any way anything other than a very fresh uptrend. And this uptrend was really starting to try to gain some traction. It was only the third session where we had confirmation of an uptrend. So is this something weeks long or months long? No. And the less time it's had in that uptrending mode, well, the more vulnerable that it is. So here's the S&P pulling back fairly sharply here this morning. And the pup is in the house. Yeah, you want to go back outside? Okay, hang on. I'm going to keep talking while I'm walking you through this. And you can also see that the NASDAQ, all right, manners though, okay? Don't act a fool. All right. Sometimes it's bring your pup Friday to work day. I do love having her in the office. We kind of think of her as a good luck charm in the pastry. All right, so back to the NAS. So again, I would love to have. I'll tell you what, NASDAQ, even more so than the S&P, could be interesting for a swing buy. Meaning, in this case, I'm looking specifically at the daily time frame, specifically at the daily price movement range, a fresh, albeit vulnerable uptrend, but dominating with the green candles, which are bullish participation, bullish price action. But take a look at the sanity check here. All right. A 1% pullback. Is that a lot? No. But that's 21,127. A 2% pullback is 20,913. A 3%, which we're somewhere between 2 and 3, would be 20,007. A 5 to 10 is when people really start to freak out. 20, oh my gosh, the world is going to end. But this at least gives us an idea of where those mile markers, if you will, are. And then I look at it from the perspective of, if I get a pullback to 20,700, which is a 3% pullback, could I be in then the daily price movement range? Absolutely. And I'd be fine with a pullback buy like that. I'd focus on the long side. On the short side, for those of you wondering, Ron, do you ever short? Very rarely in terms of swings when we've had overall a very bullish year. I mean, that seems to sometimes be lost in the fine print of the fact that this year, 2024, has been largely bullish month to month, quarter to quarter. If there is a short sell to be had, we'll look to day trade it. Our biggest day trade this week was a short trade in the Russell. It was a day trade. It was a today trade in the Russell. And that was a fantastic trade. And that was simply set up in a 5-minute time frame using hourly price movement ranges. So if we have an opportunity like that, maybe. If not, I'm still going to be in buy mode. All right. I'll give you an idea. So, okay, Rog, everything seems to be heading lower. What are you in this morning? Me, I'm going to always give you all what it is we're focused on. I'm still in Wells. So I've got an older position in Wells Fargo. I still want to find a way into financial. So if the weakness today can get me into some XLF or WFC, Bank of America, BAC on a pullback, right? that's the, first thing is get the watch list oriented to trends, right? That's what we talk about in Top Tier Outlook. This is what we talk about in the Mastery. That's what I talk about in the Top Tier Outlook newsletter. Where are the trends, right? So our watch list is always going to be dramatically different than the symbols typically being talked about out there in trader land, right? So financials, I would love a dip. I've been wanting to get into this financials dip for a bit. Amazon was another trade we set up this week. I would love to look at weakness in Amazon. If we can get a daily price movement range, sign me up, right? We have Alcoa. That looks to be opening pretty strong this morning. We bought Alcoa calls. Where's my recap? I'll show you all what we have. So Alcoa is another symbol that we absolutely, hang on, let me make this so it's not going to be so huge. There we go. All right, so where is our recap? There we go. This is Thursday's recap. So we're in Alcoa shares, the 40 call from $2.96. We're in the Wells Fargo. We closed out. I had to take a small loss in a swing on the Russell. But notice what we did. I bought at $4.35. I didn't add, right? I didn't take max debit. And do you think I'm pretty happy at the moment about being, look where Russell's going to open down here. You think I'm pretty happy about being out of that? Kill the monster while it's small, right? Don't feed it. What's feeding it? Rolling, adding, right? That's just going to make a smaller loss, a bigger loss, to the point where that is all that consumes, our focus. It's just the way that it works. So that's what we're in right now. Oh, and Schwab, which I'll have to keep a close eye on. I love the setup. I love where we're in from. Our trigger, we had some nice triggers in terms of even having a nice conservative trigger. So we'll see where we end up this morning. But in terms of relative outperformance, this is one of the stronger names in financials. So we'll keep an eye on this. I would love to give Schwab more company in terms of either financials exposure. Where else are we looking? We're looking at a number of places for follow through to the upside. I'll just give you an idea. Regional banks, financials, consumer discretionary, communications, industrials, technology, metals and mining, which is where Alcoa came from, and SMH. So we have a pretty good list. Let's see, 1, 2, 3, 4, 8, 9, 13. We have a watch list of about probably 22 names that we want to be looking for long positions in. Interestingly enough, the longest list belongs to financials. It's one of the strongest sectors that we've got. All right. Let me see here. We have Fed speakers this morning. Yes. I don't know that Powell did us any favors yesterday with his comments, but what I want to do is measure what that did. And you'll notice the target, if you're wondering why we're selling off, gang, the target rate probability was flirting with 80%. And Powell said, we don't mind to tap the brakes. And it was totally a Lucy and Charlie Brown with the football moment where he said, whoop, nope, not so sure we're going to cut a quarter point in December, when after that flat CPI, it looked like, hey, let's just go ahead and cut December 18. And so now what you're seeing is Powell walking that back. And that's where we're back to the low levels on those target rate probabilities for December 18. Well over a month away, but that's where we sit right now. And equities aren't going to like it, gang. Equities are not going to like a Federal Reserve that's not generally favoring lower rates, lower lending rates, lower borrowing rates, at accommodative monetary policy. All right. So yeah, we have more Fed speak. And remember, if after any speaking engagement, Powell says, whoops, they really didn't get my point, we're still going to cut, but we're going to take a much more, case by case basis, or whatever happened at the hallowed halls of the Federal Reserve. You take a look, we had core retail sales at 8:30, which really didn't seem to do much. Collins basically now at 9, and then Williams this afternoon. So not a ton. We've had days where far more Fed speakers were active, but this is where we're at. And we'll see what Collins and Williams do to sort of either back Powell's play, or whether they need to course correct what Powell might have said. Whoa, they really overreacted to what I said yesterday. You'll see the course correction then today. We'll see. We don't try to predict. We just try to measure, right? Okay, next up is Danny asks, Can you tell me why the HPMers adjust with price on toss but not trading view? They should adjust with both, Danny. They're the same approach. Yeah, they do. They do. There's no different logic. The timing might be a little bit different. Remember, the way in which they both curate the data and crunch the numbers will be a little different, but it's the same. It's the same algo. It's the same zones on both. But they do. They should. I know they do on mine. I don't know. Let's see. HPMers adjust. No, they should adjust with price. They do. Maybe refresh the chart. Bob has great feedback on Disney versus Starbucks. Thanks. Now that QER is done, stock is up 8%. What would be a good level to get in? Oh, on Disney? So after earnings? Yeah, you know what I'm going to say, right? We need a pullback. Yeah, we need a pullback. So today, this is the way I look at this. If earnings came out before the bell yesterday, which is what they did, that means all of yesterday was the single session where everyone had a chance to react to the data. That means today is the earliest I can look at it, and I do need a pullback. There's still quite a bit of volatility because of that gap, so I might wait till Monday. But yeah, I still want to keep this on the list. It's one of the better names in XLC when we take a look at the XLC communications. Yeah, and this is just, interestingly enough, it's at this point in my career, I realized that most traders trade what's popular, what they like, what's being talked about. And that's okay. That means there's a tension there, but it doesn't mean there's a trend. So as I've mentioned, if I take a look at this group, what's wasted time and money? Probabilistically. I don't mean that one good day that some stock is up or ETF is up or down, but I mean the consistency. And the consistency is going to be found in trends. So TMUS, Disney, Netflix, Charter, EA. Notice how they're punching up generally to higher highs or maintaining the highs that they've achieved. And that's where we're just chasing good money after chop and things like Meta, or worse, trying to buy Verizon in a downtrend. And that's where what you trade is more important than how you trade it makes a big difference. So I got to wait a little bit longer, but you're looking for three. I don't know. I don't do the 3 to 4 months out thing, Bob. Nobody knows what's going to happen in 3 to 4 months. I can look at the right edge of the chart right now and say we're in an uptrend. And as long as day after day, session by session, I'll continue to monitor. If I don't know anything about piloting, right? But I get a pretty good idea. No pilot says we'll be here. Just fly the plane. What's the best way to describe this? Do you think there's course corrections? Do you think there's adjustments along the way to the destination? Of course, right? So we have a decent idea of how long it might take. We might have a window of opportunity between today and the next earnings or some sort of event, right? So we have a decent idea time-wise, but I never make that part of the trade because the course corrections necessary en route to where we're heading may not make that destination, that target, that time horizon feasible. So I never try to impose those kinds of unknowable aspects to a trade. All I know is every day I'll come take a look at Disney. Does it have a trend? Yes. Is it pulling back? No. Come Monday, rinse and repeat, right? Come Tuesday, does it still have a trend? And there might be a point in time where the trend in Disney is lost, in which case that's a significant shift in the environment, right? And so I don't, I think this idea of 3 to 4 months out, it's an unknowable thing. But what we can know is what's immediate and just take it step by step, right? Rather than leaping ahead. And I know that's not really your question, but it's kind of built into that, right, Bob? So you're looking to go 3 to 4 months out. If you're going to do that, I would tell you set it up on a weekly chart, not as a daily time frame swing. Certainly not in an intraday time frame, right? So if the time frame helps give us clarity for the time horizon, I would say if your goal, and it's a fine goal, right? You're saying, Rod, 3 to 4 months from now, I want to be, that's my time horizon. Look at a weekly time frame because it's really beyond what a daily time frame from my experience, is capable of doing. Yeah. Okay. Let's see what else we have here. But thank you for the question. And I love that you're focusing on trends, right? I like that trend in Disney too, Bob. The weekly time frame has a lot of work, by the way, ahead of it. Interestingly enough, the weekly time frame of Disney is still below, right? It's still below the 200. It's still below the anchored VWAP. And so it's still got a ways to go before it really proves to me that it has an ability to really keep going. And that would be, so you might say, okay, Rog, what's that level? Yeah. See, we're totally synced up here. About 118. I keep an eye on the area about 118. 118 to even 120. We can get above that on the weekly. Now we're making some serious progress through some key levels. All right. Dog's ready to come in. It's hot out there, isn't it, girl? Come on. No, she wants me out there. Who here has a dog where they come to the door? It's gorgeous out. Florida, this is a great time of year in Florida. Comes to the window, comes to the door, like, come on out. Maybe we should listen to our animals more and spend some time outside. Do I need to have an outside office? I don't know how I put this rig outside, but that would be kind of cool. All right, what else do we have here? Let's circle back to our indices. So as I prepare for the morning, I'm going to head on over into the Sector Secrets Mastery Room, and we're going to see what we have available to us. We're clearly well below the previous session close. So as day traders, most especially in the S&P and the NASDAQ, we'll be looking for potential long puts as day trades. And then on the flip side of that, if the weakness in the S&P, NASDAQ, Dow, or Russell starts to, on the longer term time frames, close the distance to overnight positions that we want, that's when we'll start to buy those calls. Imagine buying calls yesterday at the highs, which is what sadly most traders do. Right? They're going to see, oh, we've broken this threshold to the upside. Let's get long. And they buy the call with bullish momentum. Does anyone think those positions are going to be down and markedly so this morning? This is why, from a risk perspective, right? Just from a risk perspective, buying pullbacks is going to far outperform buying momentum. And this is just something I've learned over 30 years. All of us have a choice at some point as to what indicators we're going to use and what style of trading we're going to use. And ultimately, this is a style choice. It's not a right or wrong choice, right? But it's a style choice. And then in that style choice, there are certain advantages. And one of them is, if we're going to be buying, like we did Schwab, I'm going to be kind of concerned about Schwab. Schwab's going to have to fight an outgoing tide, but it's an uptrend. Isn't that interesting? And I don't know where it's going to open. It just could be, let's see if I have any better idea on. I want to show you where we might take some heat too. All right, so you can see where we're going to open. Looks like around 79 potentially. No, sorry, 79.80. Okay. Oh, that's not so bad. Okay, that's not a big deal. You might say, okay, Rog, explain to me why that's not a big deal. So imagine yesterday's Schwab candle and you bought it 82, right? Let's say you're looking at momentum and Schwab's up and away and you buy at 82 or even at 81, right? Do you think that's a different experience than buying at our conservative trigger was 79.90? I'm 9 cents down on that trade in terms of the trigger. Our aggressive entry, so we knew it was aggressive. We position size accordingly. That was $80.60. That's 80 cents away. Do you think that's a calamity? Now, do you think if you're long from 82, you got a problem on your hands? Probably. If you're long from 79.90 and 80.60, problem? Probably not so much. That's the difference between buying a dip and buying into the rip. And we don't want to do the latter. All right, gang. As always, I will see you all, not tomorrow, see you Sunday for the Top Tier Outlook. By the way, that Sunday show is our most popular show of the week. So if you haven't yet checked it out, 6 p.m. Eastern, Sunday, we're on for about 30 minutes, answering your questions, preparing for the week, talking about the hot zones, talking about the macro. If you haven't yet checked it out, please do. It's at the Simpler Trading YouTube channel, Sunday at 6 p.m., and at my YouTube channel on Sunday at 6 p.m. All right, gang. Be good to each other. I'll talk with you soon.